weird messages. So if you can, okay? Okay, perfect. Well, there you go. Then you get to see the disclaimer again. Lucky you. How about this? All right, I'm not a registered broker-dealer, which means I don't give individualized trading advice. As I'll give recommendations, of course. As you know, trading has risks, so people trade and use caution before moving into any real money positions, and I do not have any trading restrictions. All right. You can see our economic calendar here as well. I think you can see this. Okay. Not so much going on here this week, economically speaking. You'll notice, of course, we have our oil inventory numbers coming out tomorrow. Thursday, we've got our weekly jobs numbers, and then Friday, import and export prices. But it's a pretty slow economic week, which in a way is kind of nice because it gives us the ability to go in and really just trade purely off of the technicals. There may be some news that comes out here or there, but for the most part, it's kind of a nice market because we're dealing with both pure technical types of plays, right? All right, so let me bring in the charts and go. It will be just me today. You guys are stuck with just me. Bill was on his way to San Antonio, so I'm actually looking forward to that. I'll be traveling tomorrow to San Antonio. So as a reminder, guys, before I forget, Traders Talk subscribers, just with my crazy schedule, we don't have class tonight. You guys have all been extended an extra session for tonight, and then Thursday we'll have class, but it'll meet a little bit earlier. Hopefully people in San Antonio will want to hang out with us, and I'll teach it from San Antonio. Yes, Scott said downtown San Antonio is so cool. It is. It's a fun little city. I'll tell you what. I love that area, that downtown, and so I tend to really enjoy food. So they have some really, really good restaurants. So I'm pretty excited. Anyway. All right. So yes. So so as I was saying, it will be just me teaching here today, and we may have Sydney joining us at some point. I'm not sure. She's still asleep here. It's only 9 a.m. in Seattle, and she had a cold the last couple of days, so she's sleeping in. So she'll be hanging with me today. She's, yeah, anyway, so she may come and join us. It's pretty hilarious. So if she does, you'll hear her. All right, let me do this. She said she's gotten super, super chatty, by the way, so if she shows up, you will probably definitely be hearing from her. All right, oh, good. Rose, you're going to be in San Antonio. Very cool. And I believe, Julie said she may be actually traveling to Texas, so she might be there as well, so that'll be fun. So yeah, I look forward to seeing a lot of you guys there. I think that'll be great. Also, if you have a chance, if you can make it to any of these live events, really try to. They're so fun. It's just lots of really great opportunities just for us to sit down and maybe answer questions, and we can spend some one-on-one time. I'm going to be looking at charting and looking for trade setups and whatnot. So I've got San Antonio this week, and then also, yeah, the other events on the schedule. I don't know if they've put it on the website yet, but they may have. I don't know. I'll check. But just so you know, obviously San Antonio this week, and then Phoenix, I will be at that event as well. And that's a Monday, Tuesday. It's the 21st, 22nd, so in just a couple of weeks I'll be in Phoenix. And then the very last day of March, first day of April, we have a Tampa next up, and I'm going to be attending that one as well. So I'll be there hanging out. There you go. Mike, you're going to Tampa? And, if you guys make it to Tampa, you're actually going to see the kids. Likely. I'm going to fly them in. It's right before their spring break, so we're going to hang out. So they may be at the class. They may be at the beach. We'll see. I'm sure that's not motivation enough for you to go. I get that. But do come and learn about the market if you can. All right, let's see here. But they're saying, oh, yeah, Phoenix 2-day deal. Yeah, definitely try to make that. You want to look at the foods? Oh, you know what? And so Dimitri is asking, what about Miami on April 25? I don't know any further out than that Tampa event. So I'll check things out here. Maybe I can finalize that here in the next day or so, just so you know. Um, I'll look at the rest of the schedule. I, of course, would love to go to Miami. I think it'd be great. It's so close. I mean, and you just being at the end of the month after having just been in Tampa, it may not work out, but I'll keep you posted on that. And I'll try to get that finalized soon. If you want to try to come to one of my classes, I'll try to get that finalized so you can plan around that, okay? Yes, and Scott's asking about leaps. You remember me teaching leaps a little while ago. Am I still doing that? And absolutely. Leaps on call options. In fact, I thought about putting one of those online classes on again because there's some really neat things going on with the markets. In fact, let's talk about that for a second. But before we do that, Victor brought up Whole Foods, so let me cover this, and then I'll go into that idea of leaps here in just a second. Okay, so Victor is talking about maybe a bullish reversal on Whole Foods. Now, you're talking on the daily chart or just the 5-minute chart, because you see a little bit of that on both of these time frames, by the way. So let me just switch over to extreme charts at first. So what you see here on extreme charts is a real big W kind of a pattern going. Let me zoom out and you can see the big picture here. Okay, so you're talking, yeah, even just this week. So let me show you what we've got going on with Whole Foods. Obviously, we've been in a downtrending market, and you get into this area where we had a new low back in November, December, and it rallied, a pretty nice rally there. It's kind of a new high. We're going to pull back to one more new low. We're right back up to this kind of previous high area right there, testing, this is called the middle of the W, testing that middle of the W. And so what it looks like we have, even here, is a W, sort of a pattern developing on the daily chart. Oh, and you guys were looking at a weekly even? On a longer term chart? I mean, yeah, so not exactly sure. Here we go. If I switch this out to a weekly, you can also see kind of that W pattern. So when you start to see the W's, it looks like things may be bottoming out. And I think, guys, was it last week I showed the different variations in the W patterns? I think it was. You've got different W variations, and this one that we've had here on Whole Foods, okay, thank you, I have this. So this one on Whole Foods is that last variation that I showed you where you have a stock that's hit a lower low. So you have kind of this downdraft, upswing, and a lower low right there. That tends to be a stronger reversal or bounce pattern just because you have a tendency on that pattern to wash out the sellers. For those of you that weren't here last week, I'll draw it out for you quickly so you can see and just be caught up to speed here. Okay. Okay, so here we go. So the different W patterns, you have like something like this, a regular, it's just kind of a horizontal bottom there on a W with the lows hit about the same price point. Sometimes you'll have a W pattern like this, where the W will make a higher low on the right side of the W, and then other times you'll have a pattern like this, where you'll see it bounce, and it'll drop to a new low and then surge higher. So out of these, it's pretty typical to look at these and think that maybe the first two patterns are the stronger, more bullish patterns, but it really, in reality, you tend to see a stronger bounce and big, stronger buying pressure off of the pattern on the right because you do have that area where you sort of wash out the sellers. Anybody who was selling, you sort of, I think, attract all that, your panic selling often in those. Anybody who's a little bit nervous, they sell. And if it drops to new lows, you often hit people's stops, right, that were willing to hang on through a certain amount of weakness, and then all of a sudden they all get stopped out. Well, if anybody who was already afraid of the stock, if they've sold, who was left? They're pretty much the buyers, right? And so that's where you tend to see the big, strong reversals. So you have a little bit of that on Whole Foods. Whole Foods is still dealing with the middle of the W area, but if it could break above that, that ends up being a strong reversal kind of a pattern, and it tends to show us that we have a little bit of bottoming pressure here. This is now Whole Foods on a daily chart. We see somewhat of a similar pattern. And we move over here to the Bollinger Band. You're seeing where Whole Foods it's already starting to push above the upper band. Now, I updated my charts of criteria before I started. Let me do this quick update of charts. And you can just kind of see where it's pushing higher. We already have a little bit of a long wick at the top today, so we're seeing some little bit of weakness here, and that's really coming as I switch over here to the 5-minute chart. You can see it's coming off of that high that was hit earlier. But let me know if you have a question about that. I'd be happy to go through that in more detail if there's anything here. Yeah, Mike was saying Whole Foods. Yeah, Whole Foods when it pulled back, saying it pulled down a lot off of that 200 simple. If you look here on the daily chart, I've got it's the yellow background chart. I've got the 200 simple moving average there in red. You can see what spiked above that and then pulled back quite heavily off of that. You're right. All right, so let's do this. Somebody had asked about loops, so let me show you. Oh yeah, Bill, absolutely. Does it sound a little bit weird? Does the sound it's a little bit different for you guys today? You doing fine? Okay. All right. I guess everybody's saying it sounds okay. A little muffled. Huh. This is what makes me crazy. It sounds good to some of you. Most of you, a couple of you say a little fuzzy. Maybe because my fan is running. Let's see. Let me see. Guess what's going on. If I could shut down, I know if I shut down eSignal, it would stop that problem right now, but I hate to do that. Let me see if just closing extreme charts for a minute will help. Okay, so there is something weird going on. Hang on a second. The sound, I love this, raises in volume as you speak like a spray of water added to cool off the words. That's beautiful. All right. It's not the distance on the mic. If you guys will be patient for just a minute, let me see if I can fix this, okay? I don't think this will kick me out of class. It shouldn't. If it does, I'll hop right back in, all right? So I'm going to mute and see if I can fix this. Just a second. Okay. All right, let's try this, guys. Let me see if this gets any better. It did kick me out, but I'm back. All right, yeah, hopefully that'll be, oh, much better. Okay, well, good. All right. Thanks for letting me know. I never know unless you tell me if there's something weird. Okay, cool. So let's try this. What? Oh, hey, Jim. What day is my intraday class? It was supposed to be last week, last Wednesday. We've done some juggling and changing of schedules a little bit. Okay, so let's do this. Yeah, hey, Victor. Is this issue also with Apple versus Windows 10? I have no idea. Bill has similar issues with eSignal with what? I'm not sure what issues you're talking about. I run Apple's, the Apple. I haven't had any issues. I don't use Windows 10. I don't want it. So I'm on the previous version. I haven't had any problems with eSignal or Windows or anything with the Apple, so I'm not quite sure. If yeah, the issue I just had to do with sound with this GoToWebinar application. So if you have a, I don't know if there's, if there's another tech question I can help you with, let me know. I can give you a little bit of info. I'm not the most, let's say, amazing of tech people. However, I know some basic things. So, yeah, I know, shocking, right? All right, so let me do this. Let me bring in charts. And let's look at the idea here that I wanted to start with is somebody had mentioned leaps right before I had to fix my sound. So in the past, I've taught some classes on the idea of buying leaps or longer dated options. And so it doesn't necessarily have to be a leap. It could be 2 or 3 months of time. And then writing calls against that option. Well, the thing that's really nice these days, obviously, with the weekly options, in some cases, you could write a call against a leap almost every week. And so you're bringing in premium along the way, which is really nice. The thing with that is it is a bullish strategy. Buying a longer dated call option on a stock, you don't want to do that unless the stock is more bullish. I've seen Bill do this in the lab where he has purchased calls on a stock that maybe was bullish and then it started trending down. RIM is a stock that comes to mind. Changed their ticker to BlackBerry, I believe. But they were tanking and tanking and tanking, and he still came out ahead because he was writing calls all the way down. So it can work, but that's not your ideal situation. Your ideal situation is to find a stock that is trending higher, that is more bullish, so that not only are you gaining value in your leap option, but then you're also bringing in extra money on a credit when stocks start to sell off. Okay. So that's the idea here. Let's see. Are you serious? I have no idea. Judy just said we were not able to see your charts for 6 months. Now that you did what you just did, I can see your charts. I did nothing but log out of this class and log back in. So I don't know if anything changed. I'm still using the same operating system. I'm using everything exactly the same way that I have in the past. So I don't know if you upgraded, maybe, possibly. I don't know. See, this is why tech stuff makes me crazy, because it doesn't make sense. But I'm glad you can see charts now. That's something. Okay, let me catch up to the questions here for a second also. Oh, and actually, let me ask, can you see charts still? Yeah, let me know if you can still see my charts. This is for Judy, who said she couldn't see them forever. I want to hear now. Sydney just woke up. Okay. You still can. Okay, great. I was going to say maybe it's a difference in opening extreme charts or not, but I guess not. Okay. So Scott's asking, so what are you doing with leaps? Buying calls and puts, it's so expensive. Okay. So what I have a tendency to do, this is kind of what I like. The idea of finding the market or a stock that is in an uptrend and buying somewhat of a longer dated option, right? It could be a leap option or what, and then writing calls against them to bring in that premium here. And the timing, timing's neat. On a Friday, you can sell a call against a leap that you own if it's more of a down day, just to take advantage of that time decay. Even if it's a sideways day, you can sell that call against your longer dated option just to bring in that time decay on Friday. Again, I like this strategy when the markets are trending higher. If you look at things like the S&P, take technicals here on the S&P has been more bullish, and last Friday we started seeing signs it was pulling off the top. This is a sign that we may be retracing in the markets. It could have given you an opportunity to sell a call. Let's say you were doing this on the spiders. You buy more time on the spiders. You could have written a call against the spiders on Friday because of some of that weakness and the time decay, and you sell the option or write the option that expires that day. And then also coming into the markets yesterday, we had another slow day. And there were signs here. In writing your calls, you really want to do it based on the technicals, I believe. So we had a gap down yesterday morning, and then the markets rallied. They rallied off of the open, but the fact that it gapped down is a more bearish day, a more bearish sign that we've seen over the last several days that it had rallied. Every day it opened pretty strong. This day was a little more of a gap down yesterday. Now it did rally to close slightly higher, but it was a small candle body, which is a sign of weakness, right? So you could use that yesterday with the wicks at the top. You could use that to go in and sell a call option against your spiders, even yesterday or first thing this morning as it starts to trade lower, right? Let's see. And the idea is, so Dre's asking, you want more information on this? I should put that class back on the schedule. If you guys want to take it, I'll go back in and rewrite that class and kind of revamp it for to take into consideration what's happening in the market now, and I can teach that again. The general idea is you want to write a call or sell a call that is above the strike price, a strike price that you don't think it's going to trade to. So let's look at the spiders. Let's say we're doing this on the spiders. Well, when the spiders, if you're selling this call yesterday, spiders are rolling lower around 201. You may want to maybe try to sell the 201 call option against the option that you own. Now, it's not a short call. As Thomas is asking, are you selling naked? You're not naked because you own a call option on the spiders, let's say. So maybe over here, let me back the chart up. Back in this time frame, when the spiders started to bounce and push above the 50 moving average, maybe you use that bullish technical signal as the spiders came off of a big, nice W pattern over here. Maybe you use that technical signal here, the W and pushing to a new high, to go in and buy more time on a call option on the spiders. Now you can buy a leap option, you can buy just several months of time, but you buy that call and then you just hang on to it until it looks like the spiders are starting to retrace. And so you have different opportunities throughout the week. A lot of times, like I said, when you head into a Friday, you'll have opportunities just because of time decay. Like, let me back it up over here. If you bought where I said this was a Thursday, well, the next day, the spiders gap up. That very day, you could write a call. You could sell a call against the option you own, and you want to sell more time, or I'm sorry, you want to sell as a little bit of time as possible. So Friday, there could still be premium there. It's not naked because you own that long call option. Maybe you bought several months of time. On Friday, last Friday, in this area, when it gapped up here on the 26th, gaps up, starts to sell off below the opening price, you could use that as a place to write your call option. And then this stock pulls back, let's say, and then into the next week, you still own your long call. Stock strengthens. You start to see that the spiders are slowing down here. This is also a Friday. Starts to slow down, long wick at the top. You could write the call against your spiders for that day. And again, you want to just sell the call that you think you want to sell strike price that it doesn't look like the stock is going to hit. So usually that means a little bit out of the money. And if you really sharpen your charting skills, you're going to be able to have a feel for where things are slowing down. Just like yesterday, even though it pushed up a little bit, we had a longer wick at the top, showing us that things are slowing down a little bit, right? So some weakness there. And here today, you see on the spiders where we've had that gap down in that sell-off. So, yeah, Aaron said it may balance at the 200. If you're looking at the spiders, if it came up to the 200 and sold off, that would be a place to write the call. So it's a great way to go. Now, one thing about this, you don't have to do this necessarily with leap options. You can buy a short amount of time. And one thing that I would suggest that you do is if you're looking at, let's say, companies that are, announcing earnings in April, maybe you buy enough time to get through the earnings announcement. Look at me. Do you want to say hi? Oh, guess who's with me? Do you want to say hi to me? Guess who's with me and who found some M&Ms? Is this your breakfast? Can you say hi to everybody? Say hello. Can you say it loud so they can hear? Hi. Okay, there we go. So let me make sure I haven't missed any questions. And if you don't mind, Sydney will be on my lap because, as you just heard, that cold that she's had. Okay. As Scott's saying, he's thinking leaves would be cool if the market, top. Yeah, maybe we could use things if stocks start to trend down again. So you're also talking about the bearish, buying a put option with a leap option, a put leap option. You could do that as well, and it would just be the kind of the opposite sort of a trade is a bullish strategy. All right, Rose asking, do I have Leaps DVDs? No, but this is an online class that I taught once. And I try to incorporate some of that into some of the different online classes, but like I said, I'd be open to teaching that Leaps class again if you guys wanted. Aloha, Gina, welcome. Yeah, so that my class for the afternoon was scheduled for last week, and apparently nobody knew about it. So we had to, I just took it off because nobody signed up for it. So there you go. I don't know if we just didn't put the word out there well enough, but it had been on the schedule for over a month, and so I figured, hey, I'll just trade by myself. So that's what I did last Wednesday. But if you want it, let me know. But I could put it back on the schedule, but yeah, that's why you didn't. If you didn't sign up in time for it, then yeah, there you go. That's why I just took it off. Jose's asking, do you do rollovers or close and reopen positions? So as far as writing the call, so write the call. Let that time decay come in. Buy it back. If you write it on a Friday, buy it back for pennies at the end of the day if the charting is going right. I usually don't let these just expire worthless, but I'll just try to buy it back for as little as possible at the end of the day. Say hi to everybody. So, hey everybody. All right, there you go. She's from Sydney. She's going to help me teach. Hey, Drea, what next class am I doing live? I don't have anything online scheduled, but there you go. I learned so much from the next step in Texas in January. Yeah, that was fun. I was glad I got to do that one. I am going to San Antonio this week. I don't know. I mentioned this earlier about San Antonio on Thursday, Friday. So come hop down, hang out with us in San Antonio. And then coming up on in 2 weeks on a Monday, Tuesday. I think I told you guys earlier. I think it's the 21st, 22nd. I'm in Phoenix, and then I'll be in Tampa the very end of the month. So that is my live event schedule. I'd love to have you guys come to these classes. Karen, she should have gotten a hold of me. Karen, see, now you guys say you want to come. Yeah, that's sad. Literally, I canceled that class because we didn't have, it was me and the admins signed up for that class. And so I love teaching these classes as long as you guys want to come, but and maybe everybody planned on signing up that day. Maybe that's the deal. I don't know. But yeah, with nobody setting up, I just had to pull it off the schedule like 2 days beforehand. But yeah, there you go. We'll have private classes hanging out. I love it. Bug-a-million for sure. But no, I mean, like I said, if you guys want to do it, I'm happy to teach them. I just didn't want to be, sitting there teaching the class for myself. I'd rather just hang out and trade by myself at that point. All right. Yeah, and if you try to sign up on Thursday, you missed it because it was scheduled for the day before, on Wednesday. So that's why. It was supposed to be last Wednesday afternoon. Okay, so please don't forget. So maybe we need to figure out a better way to let you guys know. I don't know. Jimmy is going to Sydney trades. She's almost there. Almost. All right. Yeah, there you go. I want this to be my last year working a W-2. All right, I love that. I'll tell you, and if these are things that you want, I really like the idea of moving into some diversification. Some short-term trading is great. It can be so fun. There's a lot of money to be made there, but the real big money will come from trends and markets that are trending. I'm very excited about what's happening right now on the S&P because we have hit new highs. If you look at the S&P right now, the W pattern, so here's our W. This is just spiders, but just a fraction of the value of the S&P. So we've moved to a level above the middle of the W, and this is something that we were watching a while back. And when it broke above the middle of the W on the S&P, was a bullish and potentially trending signal here. And so we've got this uptrending kind of a market. I like that we're retracing today. I think things got a little overextended last week, and even this week, Monday, when they opened, they were a little overextended. So I like that things are pulling back today. This is the kind of area that might set us up for some next either trending or at least swing trading entries here if we can see a bounce above these moving averages. And with that brings me back to the E signal. So hang on a second. Oh, Elizabeth, were you in Arizona last month? I was there in January. A second. Trying to read all your questions, make sure I'm not missing anything, and then I'll bring in E-signal again. Oh shoot, I'm sorry that timing didn't work out. It's a bummer. Come back, hang on, Arizona. Let's see. We do a separate account for trends and one for short-term trading, Gray's asking. I don't. I know people that do. Some people will have a longer-term trending account and then shorter-term trading. What I do have, though, I have some retirement accounts and IRAs and 401ks and things like that. And in those, then I have a tendency to keep those longer term. So there is some division just by default because of what my account is. But I haven't gone out and specifically set up an account just for a trading style. If you wanted to compare how strategies are working for you, though, in a paper trading account, that might not be a bad way to go. Might be easier to track. Okay, let's see. Right, yeah, Gina, do look out for it. Maybe what I'll do is I'll try to put something back on the schedule and get a date and see if you guys this time want to come join me. Yeah, Jim, I get it. Yeah, you want to be there live? Absolutely. So let me ask you guys, what's the best way? If we put things on the website, do you see those, or should I put? I know emails. Most of you guys don't open the emails. I get that. So if you have thoughts on where you want me to put the class, if I get it scheduled again, put it out there somewhere where you see it, let me know. I know Bill's always bugging you to open your email. It's a ball. It's a ball. You want to tell everybody what you're having for breakfast? Breakfast. Yeah. She opened the M&Ms. It's true. I probably won't get Mom of the Year award right now with this breakfast. We will have eggs next. Okay, let me see. Sorry, this is great. You guys are asking lots of questions, but I want to make sure I'm not missing them. Robert's bringing up Home Depot and Nike have strong W patterns. You see this across the board. A lot of stocks have these W type patterns to it, and these types of stocks, so just looking at like a Home Depot, if you feel that, Sydney's helping me draw, if you feel that the markets are going to trend higher, then these sort of patterns can establish your entry into a longer option. Right now, Home Depot is kind of cool because it's consolidating in, see right here, a rectangle pattern right above that 10 moving average. And so if it stays here above the 10, and if we end up getting a breakout above all that resistance, that can be used as a signal to go in and move into a longer dated type of a call option to catch that trend. And you want to keep an eye on the S&P, because as long as the S&P is still in an uptrend, you have stocks like this. You look at the history of Home Depot. They have a tendency to be moving progressively higher. And yeah, they're $127 now, so they're a lot more than when they were trading in the 20s or 30s or 50s or 70s, right? But let me show you something that we were looking at in the Traders Talk years and years and years ago. And this is Sherwin-Williams. I started showing Sherwin-Williams when it was in the 70s. Let's see. So right here, when it was in the 70s, we started looking at this idea of longer dated call options and catching the trends. So you'll notice now, I just jumped back in time, stock shot up to 100. That seemed like a lot for the stock when it had been in the 70s. And then it ended up trading higher and higher and higher. And look at this trend. When it popped up from those 70s, it broke the 100 level. This stock, a paint stock, made it as high as the upper 200s, almost $300. Crazy. So you can't ever say a stock is going too far, because they may go further than you ever might think. I never would have guessed Sherwin would even be in the 200s for a paint stock, but it happens. So that just gives you an example of some other stocks maybe to look at. You've got the Home Depot, you've got stocks like Disney that have a tendency to have this longer type of a trend to it. So those are good ideas. And just to throw out a couple, there's so many others out there. Thank you for the song. Let's see, who else is open? There are, so energy, energy has been killed lately, right? What about something like looking at a rig if the drilling stocks reverse? It's not the time now, but maybe some of these that have been in the hundreds that are now trading, $11, $12, right? They may be long-term candidates as well. Nike was also another one that Robert had mentioned. You look at Nike, that longer kind of a trending behavior to it. You look at a lot of these stocks, they've gone choppy lately as they're pulling back. So let them pull back. Let's see if we find an area where we do start to see maybe some of those W bottoms and some reversals. Starbucks is another one. They've gotten quite choppy here recently. So let them pull back. Let them chop around a little bit. Wait for those days where we have big washouts, a big breakdown in the markets, and consider some of these for longer dated options and that idea of writing covered calls against it. And again, if you know that the company has earnings in a couple of weeks, or 2 or 3 months, you could buy enough time to get you up to that earnings season and trade that part if the markets are bullish, or you could go into a leap option, and those you can hold, through several earnings seasons, right? All right, let me catch up here to the questions again. Yeah, you know what, Demetrius, that's not a bad idea. Maybe he said maybe do some of the promo classes. So, and I wasn't around to do that. Text messages, there you go, Karen. I love you. Thank you. Do you hear this? She's singing I love you. Pretty much because I let her eat M&Ms. I love you. There you go. Yes, got it. Personal invitation. I will call each of you. You know what you could do, though, if you want to attend these? I'm trying to think, either let me know or let customer service know. Even if you let me know, I can just put you on a list and make sure you get your own personal email. How's that? Your own personal invite. I could do that. Let's see. Jim's asking, if I remember correctly, when the 50 EMA crosses the 200, so down direction, it's called the death cross, and the stock goes down. Is there a similar sign when the 50 crosses above the 200? Yeah, you know what? Any of those moving average crosses, especially the big ones like that, have a tendency to show us big, strong, confirmation that trends are changing. You look at something like the S&P, we're dealing with even the 20 crossing the 50 right now. The thing is with those, sometimes the crosses have a tendency to be a little bit delayed or lagging a little bit at times, but they give you confirmation into those trades, and you will see it on the bullish side as well. The reason people make a big deal about it on the bearish side of things is just that that's where you get more emotion. There's more fear, and you do see a lot more emotion around there for sure. Yes, Scott, thank you for reminding me. Scott wants to look at a magic chart with Google. Shall we do that? In order to do this, however, we need to look at the daily chart first, because to me, everything starts with the daily chart. So look at Google. Is there a trend in this stock right now? You guys see anything? Is there much there? Anything? Huh? All right. So, yeah, not so much. Chop, right? It's not in a big, strong trend. It's been really quite choppy, which can make for great day trades or swing trades, but it's been quite choppy. So to look at the magic chart, the idea with the magic chart, let me jump over here back to E-signal again. I'm on this page somewhere. Oh, it's over on the left. Got it. Let me make this real big. The idea with the magic chart right over here is that we've got a 15-minute candlestick. So where I find the magic chart is really helpful is to help keep you in trades through some of the swings. So for instance, let me bring in my pen. Over here on the second, this is Apple. The moving averages crossing right there on Apple triggered a bullish entry on the magic chart. So if everything else is bullish and the magic chart here right in this area says, yep, things are bullish here as well, you have a place to buy call options. Now, a downdraft like that the next day right in here may scare you and keep you, maybe shake you out of the trade, right? So if it shakes you out of the trade, then you may miss this next rally. So the idea with the magic chart is that you're going to get these signals, and it's going to say, okay, go along here, buy your call options, and even though this is a downdraft and Apple is selling off, those moving averages never crossed. So you would stay in the trade technically until over here. So the idea, again, is it should keep you in through some of the little shakeouts. So you're in at the cross and out at the cross is one of the ways to trade this, which would give you a good 2.5 day swing trade. So it's going to work better when you have a stock that is moving with a little more consistency. Now we look at Google. Google is not really strong or not in any real clear kind of a trend. So you need to, if you're going to use the magic chart, you need to incorporate that in and realize, okay, we don't have a strong trend, and so your signals might be too delayed on the magic chart to really have it be super useful, honestly. So here on the magic chart, you'll see that the moving averages crossed, but this was at yesterday's open. When yesterday's open, things gapped down. So real quickly, that would give you an entry about here, maybe not the most timely bearish entry, and then over here this morning when the moving averages crossed again, you have an exit. Still, it could have been a profitable trade, but not as much as maybe it could have been if you had a stock that was actually in a strong trend. So if you're going to use a magic chart on a stock when things are a little choppier, you want to use it on something like Google, where you've got a lot of volatility, right? So it can move enough to make it worthwhile, and you need to really be careful and use it on those days where there's some momentum to it, like what we had over here on the first, right? Big momentum days. Otherwise, reserve it for some of your stocks when they are in trends. The magic chart will help you. It'll help prevent you from jumping out when things are continuing to move and are quite strong. if that makes any sense at all. Let's see. Why is it called the magic chart? Because it's magic. It's actually a chart that I was taught by a market maker years and years ago, and that's what he called it. So there you go, magic chart, because he loved it. Because again, it kept him in through trades where other people were getting shaken out, and you shouldn't be shaken out. Oh, okay, so okay, I made a blanket for Sydney. She doesn't know. What are the settings on the Bollinger Bands for the magic chart are same regular settings? Okay, it's our same regular settings. It's the 20 for the bands with a basically 20 and 2 for the bands themselves, and then a 2 point anyway, 22. That's it, 22. 24, the moving average is how this is going to end up working. You'll be centered around a 20 simple moving average, and then 2 standard deviations beyond that is where the Bollinger Bands are calculated. So you're really looking at a 20 and 2 regular setting. And I believe if you use eSignal and plug those in, I think it defaults right to that setting. So the magic chart will be the bands, and the bands are kind of a newer addition. When I started using this, and from the market maker, it was basically just a 15-minute candlestick with a 10 and a 20 exponential moving average. And then I adjusted it a little bit. I added on the 20. I changed the 20 exponential to a 20 simple to be a part of the bands, and added the Bollinger Bands on. Where that can help you is sometimes on some of these stronger reversal signals, sometimes you'll see a good strong Bollinger Band top or Bollinger Band bottom that you can use to help you maybe with an earlier exit. All right, let me catch up the questions again. Yeah, boy, I'm amazed at how many of you now are saying you wanted to sign up for that class. So if that's a good idea, list the classes under my account page. The banner is here. That'd be really helpful. Okay. Okay. Yeah, and make sure you've got the 20 and 2 settings on your bands, and with a 15-minute chart, it should look identical to this, no matter which program you are using. If it doesn't, there's something weird going on. What time is a good time to jump back in for afternoon trades? Gina's asking. You know what happens? We're running in, and we see it even now, where this time of day, things start to slow down a little bit. So let me jump back to the S&P. There's never one perfect time that I can tell you that things break out, but we typically have at some point during the day, things are going to slow down, and it's usually around that lunchtime hour, and it has really not a lot to do with it being lunchtime, but an awful lot to do with the European markets closing, and volume just slows down. And so you tend to see these things kind of pinching together. On the S&P, we already had a breakout a little bit early, right at noon. It was kind of a first breakout. Sometimes when the breakouts happen a little bit early, you'll move into even a second Bollinger Band pinch. So watch for that to happen. And it may happen today because we're already seeing on the S&P the markets are coming down below the 10 exponential moving average. So it's looking more sideways again and a little bit slower right here even. So typically, though, you will start to see things slowing really any time after the markets have been open an hour and a half. And they'll move into about noon, sometimes 1 o'clock. This is all Eastern time, and then you have a tendency to see those breakouts usually after 1 o'clock Eastern. But again, this can vary from day to day. So just know that that's kind of a general time frame, and then just wait and see when that actually happens, right? And that you'll identify based on the chart. Okay, so again, I love this. Lots of questions. Let me make sure I haven't missed anything. If I did, just just copy and paste your question back in. Nothing personal for sure if I missed it. Let's see, Netflix, did it satisfy your conditions for buying down? You know what? Are you talking today? Because Netflix today had a really cool pattern. I was watching Netflix this morning. Some of you who subscribed to the Chart Watch got an alert from me as I watched Netflix gap down, more than fill the gap, right? It had this big upswing, and it started retracing. So this, I watched, was patient, watching, waiting, started to bounce at the 10 moving average right there. The next candle, we had an up candle. That is a bullish entry into a trade. So stock continues to move. Started this little uptrend, and bouncing around that 10 exponential moving average, pushed up around 98, 98.21, and then we have a bearish engulfing candle right there. If you were doing a day trade on Netflix, this is your entry and your exit right here. My pen again. Your entry would have been somewhere here around that 10 exponential moving average, and your exit is over here on that bearish engulfing. You're talking a trade of around the 96.50 in and out at 98. So it's $1.50 in just a really, an hour-long trade at the most. So that's a way that you could day trade some moves like this. You can also take this same exact pattern. If you see this on a daily chart, that could have been a nice little trending trade for days and days, right? Let's see. Hey, Richard, I love it. Good to see you here. Richard said, I love your trend-setting DVDs. So this is from the class that I taught in Phoenix in January, and that was recorded to DVD. So I'm glad you're enjoying those. It's kind of the class that goes beyond the trend trading DVD set. Richard, you're already on disc 9. Awesome. How many discs are there, by the way? I haven't even seen them yet. Richard says, great stuff. Question, unless the stock is already in a trend and you're looking for a retracement and a bounce at a moving average, would you enter a swing trend if it continues to move in your direction? Let's see, would you enter a swing trade and then turn it into a trending trade? Yeah, you can do that. If the stock has that trending pattern to it, you can. Sometimes what I'll do is do the actual swing trade portion. So you guys all know what a swing trade is, right? Let's just pretend for a moment that this is a daily chart, and each candlestick represents one day. Well, your swing trade would be entering on a bounce off the moving average and getting in or getting out over here at the top where things start to weaken. It's a swing trade can be anywhere from 1 to 5 days. A trending trade would be one that you get in over here, same place at the beginning, and you'd stay in through the entire trend, and you would stay in until the moving averages break. And so it's just a little bit of a different type of a trade. The trending trade is a little bit longer. Swing trade is a little bit faster. So let's say you enter a trade, and you enter let's say, what you want to be a swing trade here. Maybe you buy 10 contracts. Well, over here it starts topping out, but you maybe really like the way the markets are. You know what you could always do is hold on to 5 of your contracts, and if the chart makes sense, you can change that and do a trending trade on those 5, but then maybe still take some profit off of your other 5, so you still have your original plan going, and you swing trade part of it, but you may hold that risk a little bit longer on another part because you like the way the markets are moving. And if the S&P is in a trend, you're going to have a tendency to see more of your other stocks trend, right? So you could do that. You could sell 5 and then re-enter a trending trade over here on one of these pullbacks near the 10 moving average. So does that make sense? Is that answering your question, I hope? Let's see, Greg's asking if you're in a multi-day trade and the market opens and you have a technical exit price determination from previously, how long do you wait into the market open to act on it? Yeah, I mean, so for me, I don't do much in the first 5 minutes. I really don't, because I find that there's a lot of volatility there. Let's say, for example, if you had calls on Netflix and you just look at what happened this morning, that gap down could have triggered a stop maybe if you were already on the bullish side of the trade, and I don't want to be stopped out just from just a weird price point that happens early in the morning and we know there's more volatility right off the bat. I have a tendency to say, wait, let that first 5-minute candle close, and then move your stop near somewhere in that in that area or even at the opening price, and then get ready to sell if things break down again, which they didn't in the case of Netflix if you were in calls. So for me, it's just after the first 5 minutes. And Bill will do it a little bit earlier, so it kind of depends on your style and your preference. But if you're in more of a longer trade where you're giving it a chance to move a little bit, don't freak out over the first few minutes, because a lot of times we'll see weird volatility that doesn't last, that is not sustainable. And so, and I would really encourage you and recommend that you go through and spend some time with your charts and just see how this all plays out. Because look at this. If I change Netflix to a 1-minute chart, oh yeah, we can't really even see it well, but I was going to say, look at this. If I jump back, just jump back to the end of the day yesterday. Okay, market's open. Netflix gaps down. It looks like it's tanking. At one point in the first few seconds there, Netflix would have been really, really bearish, right? Because the bottom of the wick is how red that candle would have been. Would have been a big, ugly red candle. But if you're patient a little bit, you see within the next few minutes, remember this is a 1-minute chart, within the next few minutes, the stock is already retracing and filling the gap. So those are some things that I want you to think about, just not freaking out over the first couple minutes what you see in your charts. Let's see, Victor asked about the magic charts. So if you guys have eSignal through us and you've downloaded the templates, you'll have my magic chart. It'll be in the templates. And by the way, if you haven't done this, last a week and a half ago, I think, they updated the templates that I have. So if you want to go in and re-download the templates, and just call tech support and have them help you, because I'm not even the one to tell you how to do that. I can't even remember. But once you do that, tech support will get the templates downloaded for you, and you can click on the blue eSignal button here in the upper left, and it will give you the different files and pages that I use, and you'll have the magic chart already pre-built on there for you. The colors should come through as well. So if they don't, you could go in and change them, but I've got a yellow background for my daily chart, and then this kind of peachy sort of color for the magic chart. And I just do this so that I can differentiate, so I can glance at things and I know what time frame I'm looking at. I have a 1-minute chart also, and that's in blue. So I know, because otherwise I get confused, right? I'll look at this and think this is a daily chart, and oh, wait a second, it's a 5-minute. So now I know anytime I have a white background, it's a 5-minute candlestick chart. So I do not mess that up. It's a big deal. Yeah, let's look at this. Baidu. How is Baidu looking? Because they've had some neat things go on here on the daily chart. And you're seeing with Baidu a lot of choppiness around the 200 simple moving average. See where this is on the daily chart? They gapped up on earnings, had low volatility post earnings, but they got a lot of consolidation right around the 200. I actually kind of like where Baidu is at today, because on the 5-minute chart, you'll see over here, it's already moving into a pinch, and at the lows, it bounced off of the 10 moving average. So on the daily chart, over here on the left, this is a bounce off of that 10 exponential moving average on the daily, right? So that is so far more of a bullish sign. If Baidu could break out of a Bollinger Band pinch here today or tomorrow, if it moves higher, you're going to see confirmation that so far that 10 moving average is holding a support on Baidu. Now, if it turns bearish and breaks down below the 10, that becomes a different trade, right? And it's going to be obviously much more of a bearish signal. Yeah, talking about, let's see, my market insight talks about moving into calls at the EMAs. Yeah, depending on what stock it is, if you've got a stock that's like Baidu, right? It's traded down on the daily chart. It's starting to bounce around this 10 exponential moving average. That's an entry right off, an entry pattern right off of what I teach in the trend trading classes. I know some of you have those DVDs. I've got those there, and then also the trend setting DVDs, as Richard was talking about. That is more application of that trend trading DVD set where I'm teaching you. You can get into a call position closer to those moving averages, or a put position if the stock is more bearish. If you can trade closer to those moving averages, you're going to spend less on your options, and you're going to be able to be very close to your exit, which then just means higher profit potential, and if the trades go against you, a lower potential loss as well, which is huge, right? Hey, Tip Reset, so good to see you. I was thinking about you just the other day. I hope everything's going well. And your aunt, actually, I was wondering how your aunt is doing. I hope I don't know. I hope things are going smoothly for you. Okay, let's look at TRV. Tracy's bringing up TRV. Saying, yeah, and this is a big momentum move today for the stock, right? TRV just broke out of a rectangle on the daily chart today. Yeah, going for a slow trending trade. And look at this. Let me show you on it's a little bit easier on stream charts sometimes to jump around, show you a little more time on that. It has that slow upward move off of a higher low. So this is that variation of a W pattern that I talked about earlier. We have that breakdown, retrace, higher low. So you've got that higher low W pattern, uptrending ability here is it's staying above the 10 moving average. And it's, it's an insurance stock. You look at some of these stocks, you can look at this sector, but also let's just look at the long term of this stock for a minute. There we go. And check this out, just kind of that slower, steady type of an upswing. And if you're doing something like this, you can decide, do you want to do this and just buy and hold on, or do you want to buy and see if there is the right timing to sell a call against that stock? And if you're doing that idea that I talked about earlier about writing calls against your stocks or your longer dated call options, you're probably not writing calls every single week, but as a day trade on Friday, you could probably do it almost every week. But other than that, you probably have at least half of the weeks that you could write calls against your stock. So don't feel like you have to do it all the time, but it's that option is out there for you to bring in a little extra premium. All right. Oh, thank you, Richard. There are 12 discs in the trend setting trades class. That's good. I didn't know how that ended up going. Okay. Catch up here. Okay, last question about entering Netflix off of a bounce off the daily chart. Yeah, and Netflix, the thing that makes a trade on Netflix so good is that in that gap down, when I talked about the gap down on the 5-minute chart, then to bring in that daily chart and look at that piece with it too, it was a gap down near that 20 exponential moving average that you see here on the chart on the right. So you have a 5-minute chart that is bullish, and then you also have a daily chart that is bullish. So when you have more time frames pointing toward the same direction, that's really important. All right. Mike's asking, is there any use for an intraday chart with the VIX? I used to use it years ago, and I've stopped. I could test it and see if there's anything that seems helpful anymore. There may be. I'm not sure it's necessary, I guess, is what I'm getting at. I could start looking at that again. I got to the point that when I used it before, it was really just great for super fast day trading, and so, but other than that, I just didn't really see a whole lot of uses, and I ended up seeing less and less reason to use it, and it got to the point I had it on my chart and I just wasn't ever looking at it, so that's when I took it off. So maybe, possibly, but I tend to look nowadays at the VIX when the markets, if they get extremely bearish and very oversold, the VIX can be really good at helping find a market bottom, so that's when I have a tendency to look at it. Yes, Demetrius asking if the stock trades above the 50 for the first time in a while, does that reset the day count? Yes, it does. So breakout above the 50 moving average can often be a new move, but you need to get that follow through. So who broke through the 50 then did not follow through the next day? So that was something that didn't work. Here's something that did. If you look at IWM, this has been crazy. So the IWM on the daily chart, check this out. This is a good example. They broke out above the 50 right here the other day. And so technically, that becomes the first day of the move. And you look at them, and they were up that day, the next day, the next day, the next day, way longer than what we usually, well, I shouldn't say that, not way longer, but right, it's still in the day count, but quite long, right? It had moved up 5 days in a row. Now today, we're finally starting to pull back. So it is in the day count. Usually we see 3, 4, 5 days of movement, but quite strong on the IWM. And this just gives you an idea of what can happen on a breakout above that 50 moving average. Let's see, Joanne, how much are these templates? These templates, if you've got a signal through us, they're free. You just go in, talk to tech support, You'll be able to download these for nothing. We just wanted to make it as easy as possible for you guys to set this up. So yeah, I mean, I'm sure you could probably pay us something if you felt like it. Just don't. They're free. So our tech support people will help you do that, no problem. All right, folks, I was going to lie to you, Netflix could bounce at 10 a.m. Talking over here on that retracement. With the spiders going lower because of where Netflix was placed on the daily chart. The bounce off the 20 moving average, the retracement to the 10 exponential on the 5-minute, everything about that was a good solid sign. Now, Philip's point is at the same time, the markets were more bearish. So they were, but also look at the difference in the pattern here. Where Netflix retraced, here, was it yesterday? Netflix on the daily chart, they already retraced really big yesterday. So now we look at the S&P. The S&P did not retrace yesterday. Their retracement is today. So even though the S&P, so this is going to be important, even though the S&P is more bearish, here this morning it was in a little bit of a downtrend there, the daily chart is still very, very bullish, right? It's just retracing. Sure, it's down, but it's still well above the 10 moving average. So you've got to keep some perspective here. This is why that daily chart is super, super important. But really good question. Oh, Starbucks broke below the moving average. We consider puts. You know, you could, as a shorter-term trade, you look at Starbucks. They've been choppier on the daily chart is the thing. So they broke yesterday below all their moving averages, and today they're kind of bouncing around. Let's see it over here sometimes. You can see right there. They're sitting at their 200 simple, which has also been some support at times for the stock. So it's one that I almost think on a pattern like this for me, you either day trade it or you just wait till there's some clarity. It's tough to force it when a stock gets really choppy and not super clear. Yeah, and hey, Demetrius asking, are there planned topics for San Antonio? You know what we do at the next step? We will go in with definitely some planned topics. If you guys remember the last time Cindy was here when I taught this class, she ended up getting a cookie, so now she's asking for a cookie. Oh boy. So yeah, back to San Antonio. We will have planned topics at these next step events, and some of those will be charting from me. Bill will have some strategies that he'll want to teach you, but we also will adapt each and every class to the group that is there. So if there is something in particular that you would like to learn about or certain questions you have, even if they will pop up during the class while you're there, let us know, and we'll tailor the class around that. We also want to try to do some live practice trading with you too. So you'll have some topics of discussion. Certainly, I want to work with you on some charting skills and give you some things I think are going to be really important for your trading these days. And then also we'll adapt the class to meet your needs, of course, and work in some live practice trading so you get some of that live practice as well. So definitely, if there's something you want us to cover, absolutely come prepared with that. Or just like I said, just on the fly there, if something pops up in your mind that you feel like you've been struggling with or you have questions about, or sometimes you may not even know how to articulate the question, right? But it's just that other people in the class may be experiencing the same thing. And we'll go into that, and if it's something you guys want to learn about, we will absolutely adjust the class to take some time for that. All right, let's see here. Amazon failed. Yeah, so I talked about Amazon last night in my Market Insight. Amazon is kind of interesting because this has pulled back and it's dropped below the 50 moving average. So is that bearish? It's bearish enough for a day trade. And in fact, this is one of my day trading, bearish targets right here. Amazon had closed above the 50 and then it consolidated above the 50 moving average. All this stuff is really great, really nice. That day over here, it breaks down below the 50. This becomes a place to consider buying put options, but not as a real long-term trade by any means, because we're still trading above those exponential averages. So it's a bearish day trade. Now it came down to the 10, actually got a gap down this morning, and it's already bouncing up the 20 moving average. Let me show you. Yes, it's below the 50, but do you notice what's happening here? On this bullish candle from over here, This pattern right here looks like a big rising 3 candle pattern. Amazon has not broken down below that bullish candle body. So even though it's been bearish enough to buy puts as a day trade here for a couple of days, the daily chart still is bullish on Amazon. And this is where you might want to look to see if the overall markets remain bullish, and if Amazon can bounce here, this could lead towards some nice low call buying opportunities even. And this goes back to that idea of trying to get into these trades as close to the moving averages as possible. Right? Where Amazon is right now, you see further momentum. We're starting to push into a little bit of a Bollinger Band pinch right now. We see that with a lot of stocks. They had an early breakout and they're already slowing down again. So these are some things to look at. So guys, I appreciate you hanging out with me today, and I got to show you a lot of different charting aspects. I see a lot of you are already heading out for work and whatnot. But yeah, it's been fun hanging out with you guys. I appreciate your patience with Sydney, by the way. She's been pretty good. But thanks for letting her hang out with us. I appreciate it. All right, you guys take care. Have a great trading week. I will see some of you in San Antonio. I can't wait. And then, yeah, the rest of you, Phoenix and Tampa. You're awesome, Mike. All right, you guys take care. We'll see you later.